Hey everybody, it is John Lone King and it is Halloween. Happy Halloween. I am looking forward to a great live broadcast with you right now, and I'm looking forward to hopefully you having a wonderful holiday weekend and a great Thanksgiving. Oh my God, a great Halloween. So let's go ahead and get started. And I'm missing my little QR code that flies over my head. So I'm trying to find it while I'm going live right now. Here we go. There we are. All right, cool. All right. Hey, so thank you for joining me. So let's get diving into what we're going to talk about today. So we have got a few big topics. First one is Fed meeting takeaway. What the heck is going on with the Fed? So the Fed met again this week, Tuesday and Wednesday. And once again, the Fed meets, interest rates are dropped by the Fed, but lo and behold, mortgage rates go up right after the Fed meets. Why in the world does that keep happening? Here's why. Because lots of reasons. Number one, Jerome Powell is trying to use his words to keep the market on a straight line in the middle. So you've got the market bouncing off of the rails. You've got rates kind of wanting to push higher because of inflation, rates wanting to push lower because of unemployment, and the loss of jobs. And so the Fed is trying to say, hey, I think that Jerome Powell is clearly saying, I see rates going lower, but I don't want you to get too high of an expectation that rates are going to go lower. So anytime that the market starts thinking rates are going to go lower faster than the Fed wants the market to think, then the Fed says rates aren't going to drop very fast. And so what happened was they dropped rates by 0.25%, which is what we expected. One of the Fed voting members, board members, said, I want it to drop by 0.5%. Another one went the opposite direction, said, I want it to drop by 0. Well, that scares the market and says, wait a second. Now, not only do we have, rarely have we ever had two people disagreeing with the consensus, but this is the first time in forever that we've had one person say, I want more, and one person say, I want less, and the consensus is in the middle. And so you see the direction the Fed is going isn't unified anymore, and that is scaring the market. And we're missing data. The government shutdown is causing us to not get the data we should be getting. And this is where Powell had a comment that really scared the market, because somebody said, how is this missing data with the government shutdown going to impact things? And he said, it's going to impact us because when we look at the December rate cut, we may not cut rates like you think we will. The word he used is that a December rate cut is not a foregone conclusion. Now, he didn't say that as part of his prepared remarks. He didn't come out and say, hey, everybody, I just want to make it clear to you that the December rate cut is not a foregone conclusion. He said that as a response when somebody specifically asked him about the government shutdown and the lack of data. Now, I interpret that as him saying, look, guys, there's a chance if we don't get any more new data between now and 6 weeks from now when we meet, because the government is still shut down, then we're not going to just automatically drop interest rates because they are concerned. We got one inflation report and 0 employment reports since the government shut down a month ago. And that one inflation report shows inflation going up. Now, there's an argument that says that's just tariffs and that inflation really isn't going up very much. But the Fed is watching very, very carefully, and they have 0 government data talking about jobs. And I believe once the government shutdown ends and we get this data, I believe it's going to show a jobs picture that is worse than what we had seen before the government shutdown. That we're seeing, Amazon announcing layoffs. We're seeing lots of companies announcing layoffs. We're seeing lots of companies that are positioning their future, saying we're not hiring any more people. Walmart is saying we're going to continue to grow, but we're not going to hire during our growth. And so the market has reacted to this right now, saying, oh my God, the Fed's not going to lower rates as fast. We might be overly exuberant in our expectation of interest rates coming down. And therefore, mortgage rates right now have gone up. I believe once the government shutdown is over, we're going to see mortgage rates come back down to where they were, if not better. So this is all just a tug of war. It's a timing issue. And the problem is, when are we going to see the results on paper? Are we going to see job losses Everything I'm reading, all the anecdotal evidence that I'm reading says, yes, we are. We're in the midst of a pullback in employment. We're in the midst of a transition period. Now, this is no different than any other transition period that's happened over the years. I'm reading a book right now. I like financial history, a book called 1929. Same guy who wrote The Big Short. And I'm just in the beginning of it, but he's talking about how there's so many parallels between then and now. And that there was a big shift in job losses because all of the farming was done by a bunch of people, not by machinery. And then in the 30s, they started getting more machinery, and people were moving from the country where they were farming to the big city because they didn't have jobs. And they went to do different jobs, and they built a different economy because the jobs weren't there anymore. Now, there was also pain in the meantime. We had the huge market crash, which is a whole nother thing that's not related to the economy per se. But the 30s weren't very good. We had the Great Depression. And so was that Great Depression caused by the market collapse? Not really. I mean, there was a lot of other factors, and it has to do with the shift in types of employment. And we're going through another one of those shifts right now. So do I see more job losses ahead statistically? I do. And I think they're happening right now. And I think we've got our blinders on because of the government shutdown. And so we're going to see more rate wobbling going forward. We're going to see rates doing this, especially when we have our blinders on. But here's the thing. Rates may be wobbling, but sellers are bending. And sellers are getting super scared, especially during the holiday season. So right now, it's Halloween, okay? We're headed into the holiday season. We've got Thanksgiving, we've got Christmas, and New Year's. And you will not find sellers casually selling their homes during this timeline. If you have your home on the market right now, it's because you want to get it sold. Because who wants to have potential buyers walking through your house during the holidays? Who wants to worry about keeping your house perfectly tidy and ready for potential buyers and then moving during the holidays? That is not common. Sellers and buyers both slow down during the holidays saying, I don't want to deal with that turmoil. So the sellers who are selling right now are committed sellers. And we've seen this market shift over the last 6 months. 6 months ago, we were still in a very, very, very strong seller's market. And today, we're not. Today, we're in a market that is different in each community, but in general, it is much more leaning towards the buyer's side. And it's going to get that way even more so over the next 60 days, in my opinion, because the buyers have already figured out they have an advantage. And the sellers who are staying on the market right now have basically said, I need to sell. I'm willing to sell during the holidays. And so beat them up while they're down. I don't know what the right term is. Strike while the iron's hot probably is not the right version of it. But the point is that kick them when they're down. I don't know. But in negotiation, when you show a sign of weakness and the other party is aggressive, they will take advantage of that weakness. And a seller who's on the market over the next 60 days is showing a sign of weakness. And that's giving buyers a huge opportunity. Those motivated sellers are going to give you as a buyer an opportunity to take advantage of some creative financing solutions. What do I mean by that? I'm seeing a lot of seller credits. I'm seeing a lot of people do permanent buydowns. I'm seeing some people do temporary buydowns. Not a huge fan of temporary buydowns, but I'll tell you what, when it works, especially because that temporary buydown, it only gives you a lower rate for 1 or 2 or 3 years, but it gives you a bucket of money that we can then apply if you refinance before that temporary buydown is over, and that we can apply that towards closing costs, because now we're paying down your balance with that bucket of money and then increasing it back towards closing costs, and you actually didn't raise your loan balance very much when you do the permanent refi down the road. But you're banking on when interest rates are going to drop, and that's the hardest thing right now, is trying to predict when this is going to happen. I see interest rates trickling down. But every economic outlook I'm looking at right now for 2026 says we might see rates down 0.25%, which puts us right at 6%, maybe in the high fives. So are we going to see a 4% rate in 2026? I highly doubt it. Now, we've all been wrong about predicting interest rates. Like God knows I've been wrong enough times, but it is a slow ride down. And as we're going down, the pop back up go quicker. We've gone up almost 0.25% in interest rates in the last 2 days, since Wednesday when the Fed did their announcement. So that's critical to understand. Rates are highly volatile and they go down a lot slower than they go up. But I do want to talk to you about some opportunities that are available during while we're in times of uncertainty. And I'll tell you that One of the big opportunities I want to share is a recent client. We're about to finish closing. This has been a challenging transaction, but it is a wonderful outcome. And it's a client of mine who is buying a home that is well under what the average home price is within that community. Probably $150,000 less than what that house should be selling for if it was in good condition, but it's not. It's not in good condition. And so they were going to buy it and they were going to work on renovating it down the road. And then ultimately we found out there's more problems to it than what we can allow for financing. As a matter of fact, there were some foundation issues that we found. And so the buyer ended up having to spend $100,000 in renovation costs. They didn't have $100,000 to spend in renovation costs, but we were able to finance that into the loan. We're about to close. They are going to get a home that they are going to be able to completely remodel with $100,000 of renovation funds. And it's only costing them $18,000 total out of pocket because the seller is paying the closing costs. They're paying their down payments. The seller is paying the closing costs. And all of that because it's a market that buyers have the opportunity to negotiate. Sellers who are trying to sell need to sell. And you, when working with a great realtor and a great lender, have the opportunity to structure your financing to make it an advantageous deal. This guy is getting $100,000 of improvements on a home for $18,000 total out of pocket, including the purchase of the home. So it is a huge opportunity, and it's really about time. You know, a lot of people talk about timing the market. And gosh, where are rates at and where's house prices? You can never make them all line up. And so you have to seize the opportunity that's available in the market that you're in, because there's always an opportunity. It's a matter of, does that opportunity fit what your circumstances are? Does it fit the price range that you're looking at buying and the type of homes that you're looking at buying? And maybe it doesn't, and that makes this not a good time for you. But there's no such thing as a good time or a bad time in the housing market. It's about how you take advantage of that time. So guys, that's about all I've got for today. If you have questions, I'm always here to help you out. I am interviewing for the job to be your lender. So scan this QR code. If I can help guide you in any way, shape, or form, I want to be here to be your guide. If you are looking at buying a home and you say, I just can't afford it, I don't have money for a down payment, man, now is the time to look at that. There are more and more down payment assistance programs out there. I've got another success story in San Diego that we're in the process of finishing up, that he's getting 20% in down payment assistance on a property in San Diego. It's absolutely amazing. There's programs like that all up and down the state of California and across the country. And so if you're in a position where you're saying, you know what, I'll never be able to be a homeowner, stop thinking that way. Pick up the phone and call me, scan this QR code, and let's set a time to talk. I am looking forward to helping to guide you to achieve your home ownership dreams, and I hope you reach out so we can make that happen for you. Thanks so much, everybody. Have a happy holiday weekend, and we'll talk to you soon. Bye-bye.